Most people stay trapped in debt for years paying that 25% interest. The default rate is not high enough to justify 25%. The real reason for 25% is profit, pure profit. If rates get capped at 10%, suddenly the math does not work for the banks. They cannot charge enough to make the profit margins they are used to. So what will they do? They will not just accept lower profits, they will change their lending standards. They will become far more selective about who gets credit. Right now, credit cards are easy to get. You can have mediocre credit and still get approved. You can have high debt and still get a new card. You can have missed payments in your history and still qualify. Why? Because the high interest rate compensates for the risk. But if the interest rate is capped at 10%, the banks cannot afford to lend to risky borrowers anymore. So they will tighten their standards dramatically. What does that mean for you? It means millions of people will lose access to credit. If you have a credit score below 750, you might not qualify for a card anymore. If you have any derogatory marks on your credit report, you might get denied. If you have a high debt-to-income ratio, you might get rejected. And even if you currently have credit cards, the banks might reduce your credit limits or cancel your cards entirely because if they cannot charge you 25%, they do not want to take the risk of lending to you at 10%. The juice is not worth the squeeze, so they will cut you off. And suddenly, millions of Americans who rely on credit cards to make ends meet will not have access anymore. Now, is that a bad thing? From the bank's perspective, yes. From the economy's perspective, maybe. From your personal financial perspective, absolutely not. Let me explain why. Credit cards are a trap. They feel like freedom. They feel like power. You can buy things you cannot afford. You can smooth out your cash flow. You can handle emergencies. But what they actually do is enslave you to debt. They trick you into spending more than you earn. They create a lifestyle that depends on borrowing. They make you feel wealthy when you are actually going broke. And over time, they destroy your ability to build real wealth because every dollar you earn goes to interest payments instead of investments. If credit cards became harder to get, if people lost access to easy credit, they would be forced to live within their means. They would have to spend less